The housing market reaches record highs, and where do sellers go? Not where you would expect. They are playing hide and seek. I'm Jim with the Bishop team, and we're gonna dig into all of this and your South Orange County real estate housing market update. Click on the button to schedule a time to talk about your specific needs in today's real estate market. Supply rules the day, even as interest rates have gone from the 2s and the 3s to 6%. As buyers' expenses have gone up due to inflation as well as the higher interest rates, they've struggled to see where they're going to be comfortable with in terms of their housing budget. As such, the buyer demand has cooled from the insane rate that we saw just a year ago and even into the beginning of 2022. For a buyer going from, say, 3.25% to 6.25%, their monthly payment would go up about 41%. That's huge. So, with less demand, what does that do relative to supply? Let's look at supply as defined by the number of homes for sale that are not in escrow. Inventory today is up 80% compared to this time last year. That's huge. But remember, at this time last year, the number of homes for sale was approaching 0, so that's a relative number. We have about 1,279 homes for sale in South Orange County at the beginning of September, down from 1,425 in August. That's about a 10% drop in supply in the last month. We expect the number of homes for sale to continue to go down or drop as we go towards the end of the year for two main factors. One is that's the seasonality of our market. Less sellers are coming on the market. And secondly, those sellers that are playing hide and seek further reduces our supply. Inventory is down 54% compared to 2019. So we're still below normal inventory levels. We're just up above where we were a year ago. This slide will show you that there just aren't as many homes coming on the market. The number of homes coming on the market is about 21% from this time last year and 25% from 2019. That's the fewest number of homes coming on the market from January to August in over 12 years. So we know sellers are playing hide and seek. What about buyers? Let's look at demand as defined by the number of homes in escrow. With everything that's going on, demand has actually increased in August heading into September. The number of homes in escrow went from 691 to 753. That's about a 9% increase in the number of homes in escrow. So supply went down 10%, but demand went up 9%. That's keeping prices from crashing. Our peak for the number of homes in escrow was back in April at about 1,051 homes in escrow. So the number of homes in escrow is down 41% compared to last year, and down 34% compared to 2019. So demand is definitely down when looking at either year. Unit sales are also down compared to last year. In fact, it's been down every month for the last 12 months in a row compared to the year prior. Year to date, we're down 31% in units compared to 2021 and down 7% year to date compared to 2019. So decreased demand is a theme, but not the total picture. So that brings us to our market index, which is the ratio of the number of homes for sale versus the number of homes in escrow. So in the last month, our market index has actually been going towards more of a seller's market. What is that market index? If we have 100 homes for sale and 10 in escrow, you've got a 10-to-1 ratio. Very strong buyer's market. If you got 100 homes for sale and 100 in escrow, that's a 1-to-1 ratio. Very strong seller's market. So the same number of homes for sale, completely different markets. So what happened? Back in February, we were 2 homes in escrow for every 1 for sale. That's huge. So we moved pretty quickly from 2 in escrow, 1 for sale to 2 for sale, 1 in escrow. But in the last month, we've come back 1.7 for sale to 1 in escrow. So slightly stronger seller's market than just a month ago. And that holds true for most of South Orange County cities. The low end at 1.4 months for Aliso Viejo, Ladera Ranch, Laguna Hills, and on the high end about 2.7 months in Dana Point. So still constricted inventory across the board. So as sellers have been hiding quicker than buyers, we've slipped back into a less than a 2-month supply. So what have disappearing sellers done coupled with reduced buyer demand to pricing? Well, prices on average were down about 2% in August, and that's on a dollar per square foot basis here in South Orange County. It's about 6% off the peak, which was in the April-May timeframe 2022. That leaves us up about 5% year to date and about 13% higher than this time last year, or year over year. That also puts us at 47% above where we were in December of 2019 with the appreciation we saw in 2020, 2021, and the beginning of 2022. So why aren't sellers rushing to cash in on near record prices and maybe take some equity off the table? The old question of where would I go has a new variable to it, and that's where a seller who maybe is paying less than a 3% interest rate, which is over a third of current owners today, now they'd be facing over a 6% interest rate. And we saw what that would do to their monthly pricing. So a lot of sellers are just loving their interest rate and staying put. So you've got to have a bigger why. You don't just want to move around the block for the heck of it because it's going to cost you a lot of money. But if someone's ready to downsize, they need more space, or they're leaving the area. So that's the sellers that are engaging with us and making the move. The question of where would you go? How you answer that question of where you would go is a separate conversation. Click on the Calendly link below and we can discuss your particular needs. That's what we're here for. So with over 25 years of experience, we've seen the ups, the downs, the good markets, the bads, the shifts that come quickly or slowly. Part of our job is to help you navigate these waters, whether you're looking to buy, looking to sell, or looking to invest. It is critical for you to work with someone who has the experience like we do so that you can navigate these waters in the best possible way for your needs. So with the Fed continuing to look at raising rates to keep inflation down, what's that mean for pricing? Who knows? Tune in next month to see what happens with pricing. Make sure that you subscribe and like so that you're notified when those updates are published and you'll get notified. Thanks for watching. I'm Jim with the Bishop team, Berkshire Hathaway Home Services, California Properties.